Welcome to Global Risk Community Chat. Today our guest is Nicholaus Rohleder. I'm very happy to have you here today, Nicholaus. Welcome.
Thank you for having me.
Yes, of course. So before we get into the topic, can you briefly introduce yourself to our audience?
Yes, absolutely. I'm Nicholaus Rohleder. I'm the co-founder of Commodities, which is two functions. It's a multi-strategy asset management firm spanning hedge fund and private equity products and a digitally enabled commodity merchanting business focused on the climate economy. My background outside of this, I'm originally from Oklahoma, grew up actually around the oil and gas sector and actually started my career as a roughneck in the oil field. Somewhat atypical path into the alternative energy industry. Outside of that, I teach the life cycle assessment course as an adjunct professor at Columbia University in New York City.
Sounds good. So with that being said, then let's jump into the topic. What would you like to share with us today?
So I think in the context of risk, our company really focuses on accelerating the deployment of climate technologies to mitigate climate risk over the long term. So if you look about how we think about risk in the context of climate and then back that into monetizing it in a business structure, which is climate commodities, we effectively have two things. We have capital gaps and we have service gaps that need to be fulfilled to get us to a net zero ecosystem by the stated climate targets tiered by 2030, 2040, 2050, and so on and so forth. So the way we think about risk in the climate sense is looking at, in the climate technology ecosystem, what needs to be done to drastically accelerate the deployment. So if you think about at a base level, if you're going to have more participants from the investment community in this space to bridge the capital gap, what are the associated risk controls around these technologies that enable them to participate? So that is one area that we are focused on. On the other side of this, on the service gap, there are certain mechanisms outside of pure capital that have to be in place for climate technologies to accelerate deployment. So for example, one thing that we are involved in is we've built a digital marketplace for offtake and feedstock contracts in the aim of drastically decreasing the time horizon it takes to ink one of those contracts so a bank can get comfortable faster with financing a project or a private equity firm. And in supplement to that, we've also built a performance guarantee insurance product that sits behind climate technologies in their first of a kind, second of a kind deployment to again meet the needs of risk transference from the capital markets to the insurance markets to fill that service gap that's going to accelerate climate technologies and their deployment globally.
Thank you so much for sharing that as well. So I hear two sides. But what are some key things when it comes to both of them, essentially? Can you share some key things or some things to be aware of, maybe?
Well, I think that there's two things. If you look at our business in two baskets and bifurcate them accordingly, we have an asset management business, which is not necessarily a new business. There's a lot of people out there doing asset management products that are ESG, that are energy transition. But I think from our perspective, in the context of really focusing on the bulk of people are focusing on project finance, growth venture investing, whereas there's not a large community of individuals and corporates and fund managers that are really focused on the output side of the equation. So if you think about the context that we have, and you look at myself and then my primary partner Ben, former portfolio manager at Millennium Management in New York, focused on energy, $60 billion hedge fund, and then prior to that, was a portfolio manager at Castleton Commodities, which used to be Blue Dreyfus Energy. Highly institutional approach to traditional commodities that's being applied here on the new energy side in the specific context of risk management and deploying newer technologies. So, I think the way we think about the asset management side of our business is fielding products that are centered around institutional human capital that does not exist. The last 10 to 15 years have been terrible for the commodities business. A lot of Ben and I's former colleagues have been pushed out of the industry. They've gone into more stable fields. And it's just as a time that a super cycle of infrastructure investment has hit us. And the Western world is really focused on localizing commodity supply chains to support the picks and shovels of the climate economy that's developing within their respective jurisdiction. So the the mismatch in human capital that's situated properly to make an impact in this growing space is really what we've capitalized on the fund management side. So we've fielded products ranging from what we call a critical materials and minerals hedge fund to a renewable power tax advantage offering, and a host of other things, including an operating business in mineral processing and refining. We also are exploring opportunities in sustainable packaging, but really focused on the enabling points on a vertically integrated basis from capital to engineering in areas that we think have long-term sustainable growth and margin protection in the space. So that's the asset management side and how we think about that. On the commodities merchanting side, it's a bit different. I think our focus area is really on disrupting how that space works with speed of contracting. So right now, and same thing on the insurance side, is really looking at a sleepy industry that's set up to be quite impactful in this space. And just like there's many groups out there on the venture and growth equity side that are disrupting that space with speed of capital, we're similarly looking at that context, taking people who have come from your private equity, Wall Street hedge fund backgrounds, applying them from a human capital perspective to this space, and looking at speed of contracting, speed of execution, speed of premium on the insurance side, and how we can be impactful in meeting some of these as a backdrop, these climate targets. So the idea being at a base level with the digital marketplace that underpins the physical trading activities, you think about the digitization of the commodity merchanting business is in the first inning. And we think that we're uniquely positioned to be a niche new energy commodity merchant that's based and functionally built off of a digital marketplace and digital function. So we think that gives us the ability from an impact perspective and a business model perspective to, as we continue to grow this platform out, drastically decrease the amount of time that is needed to ink an offtake contract, a feedstock contract, or get the associated insurance or risk control mechanisms in place to get your project financed. So in general, for listeners that don't have a background in the space, if you're going to take a newer technology out to market, you usually have, if it takes in input and spits out output, there's three things you need. You need an inbound contract that is highly sophisticated and has price management mechanisms over the long term. And then you need the corresponding contract on the offtake side that is also sophisticated and has the mechanisms to lock in that margin over the stated time horizon. And in that process, you have to line that up with getting financing on the equity side and the debt side lined up to where hopefully you can amortize out or pay back the full investment taken over the base of that contract. And then the risk then, if you have the contracts put in place, is will the technology perform? So what we've done as the investment community has pulled back on taking technology risk in the actual conversion mechanism itself or technology itself, we have created a performance insurance product that backstops that risk and effectively transfers the capital markets risk that would be taken by the investment groups on the technology into the insurance markets. And we think that's an impactful solution. And the combination of the three offtake feedstock insurance from a digital sales point of view provides us with the ability to market that side of the business as a turnkey, all-in-one from one counterparty risk solution to help scale climate technology.
Thank you for sharing as well. I think it explains a lot of new things or certain things maybe risk managers can look into on investment space, ESG space, and so on. So I have one last question for you. If you could quickly share some takeaway points with our viewers, maybe that things that they can start implementing or start taking action on very shortly.
Well, I think that there's a couple of different things there. I think the most important area to look at is really thinking about there's a lot of money that is coming into the ESG space, and that's become a mainstream term. I think that the next iteration of the growth is going to come from where are there capital and service gaps I mentioned when we started, and really looking at from a perspective of integrating from a risk manager into a business manager, where is there risk adjusted opportunity to participate? Thinking about, for example, where is there a lack of investment, right? I would argue right now, as we're seeing with commodity pricing, there's a lack of investment globally in commodities and production infrastructure. I think that from a risk and business opportunity perspective, how do you think about facilitating investment in legacy systems with some type of tilt to it, right? Whether it's technology, whether it's think for example, investing in new oil production or investing in new metals and mining assets. There's things that can be done by electrifying equipment, carbon management attachments. There's things that can be done from a risk and business opportunity perspective that lower the carbon footprint of that industry and also make money, and it's broadly impactful, and it facilitates further what's needed to meet some of these stated climate targets. So that's one thing. I think that the other thing is thinking about what services can be rendered from an enterprise risk perspective that are impactful in this space. So for example, we landed on the insurance idea as a byproduct of just listening to what the roadblocks were with our customers and other businesses, and how we would think about accelerating their time to market and really helping their business case. So I think that the big takeaway here is just most people say that they're focused on their customers, but they're really focused on their competitors in most cases. So when you think about risk in the context of leading to a business opportunity, which is how I believe it should be thought of in this climate ecosystem, you look at what are the roadblocks that are faced today to scale to efficient opportunity, efficient operation within the opportunity set, which is important to think about in this space, and look at, am I in a position from a human capital, from an enterprise risk management perspective, to participate in this ecosystem, and really start thinking about that now. So, a lot of groups are going to blink, and this space is going to be quite mature, and the barrier to entry is going to be a lot higher. As for now, it's a relatively, the opportunity set is robust. And there's room for more entrants into the space. So that's the main point of advice I think I would give for those in a risk or in a just business management seat, thinking about climate risk and either how they turn this into a business opportunity or mitigate risks in their own business.
Thank you so much for sharing that as well. I think that was a very valuable point for risk managers to looking into new opportunities or different aspects of the overall like industries they are in, essentially. So thank you so much for joining us today. Unfortunately, we have run out of our time, but thank you so much. Thank you for sharing your insights with us today, and have a great day.
Thank you so much for having me.